I think typically these episodes are usually ones to take on in terms of buying risk assets. Clearly, there's a when to take it on is an important question. It's probably a little bit too early yet. And what we did in our portfolios, we're actually constructive on risk assets, and we think that this will be an opportunity to buy cyclical exposure in Asia, both deep cyclicals and also some Asian tech, which has largely underperformed the US, which has kind of been interesting. But it's probably a little bit too early yet. What we did in our portfolio over the last 48 hours is actually use the emerging market futures contract as a hedge for our portfolio. So we use that to hedge our risk.
One number that Steve flagged in that report was the total cost, global cost on account of this virus that we would see hitting productivity gains across the globe. And that number was $570 billion. You look at the total GDP of the world at 80 trillion, and that constitutes 0.75% of the world GDP. Is that a meaningful number?
Well, it's meaningful. It's clearly not trivial, but it's not
less than 1% of GDP. The total cost of this virus outbreak and its impact.
Correct. It's not necessarily going to derail the recovery, but it's important to point out the recovery was tentative and fragile anyway. So we've only just started to see an improvement in the manufacturing surveys in global exports, and I think there's a couple of other factors, and we can come back to that. But the Fed this week is important.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.